Welcome everyone to Vested Interest. This is Shane, and in this video we are going to cover the two stocks that I will be focused on for the month of October. Yes, that is right. Another month has come and gone. We are quickly closing out September, and in October we go. So I'm going to cover the two stocks I'm looking to buy here as we enter a new month. Comcast and Procter & Gamble, and Comcast is a carryover, and we've been adding to this one for the last several months. It continues to be pulled back, so we're going to continue to add to it. And Procter & Gamble from a couple months ago, it was one we kind of laid off of in September, but we are going to look back at it in October as it is pulled back again into my buy range. So these will be the two we're focused on for the month of October. Obviously, if there are other stocks that present opportunities, we will look at those as well as the month rolls on. All right, let's jump into Comcast first here. And you can see Comcast Corporation, ticker CMCSA. This is out of the communications sector here. They closed out the week at $31.72. Looks like they were up in the after hours there at the end of trading there slightly, $31.80, but we're going to go with the $31.72. That's regular trading for most of us. Those of you who are trading in the after hours, kudos to you. Actually, no, you would have gotten a little bit more expensive, but nonetheless, all right, their 52-week range as low as $31.03, as high as $45.31. Definitely closer to its 52-week low than its 52-week high, right up against it, really. So that is part of the reason we have been adding there to this one. It is below my cost basis as well. So again, we're going to continue to do that. Market cap of $117.12 billion. It does have a beta of 0.93, so less volatile than the overall market. Current price to earnings ratio 5.28. Forward PE a little higher than that at 7.26. It does have a dividend of $1.32 with a current dividend yield of 4.16%. That is right, with a 4.16%. This one has a very high starting dividend yield. Ex-dividend date coming up October 1st. So you got to buy them at least a day before that. You really want to be getting this one on September 30th or before, so you can lock in that next dividend. If you want the next dividend, don't wait till October 1st, right? So if you own shares or currently want to add to this one, again, before the ex-dividend date on October 1st, September 30th or before is where you want to be buying. They're going to pay out on October 22nd here, so towards the end of the month. And analysts do call this a consensus buy. Well, let's go over the beta. We always said that 0.93, less volatile than the overall market. Analysts call this a consensus buy. Price target of $42.35, which would represent a potential 33.51% upside from where it currently sits, at least according to the analysts that have taken a look at this. Earnings date is also at the end of the month, October 30th, 2025. So be ready for that. If you are a holder here, they will have a call. You can check that out, or typically they post it on their webpage around or after that call. Now, jumping over to the right, I like to look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average at 2.61%. We compare it to the current 4.16%. Since it is higher than their 5-year average, at least according to dividend yield theory, that speaks to potential undervaluation on this one. Payout ratio is very low, 21.23%. Doesn't look like they're in danger of a dividend cut. Looks like they have plenty of room to continue to grow that dividend over time, which is what I like. Now, looking at return on capital employed, I like above 10%. And this one does not quite meet that at 9.30, just below that 10% I'm looking for there. But EPS, earnings per share growth, I like above 5%. They're sitting at 6.08, forecasted over the next 5 years. So I do like that, with revenue growth forecasted at 1.47, which is a little slow, but it is still projected to grow. Looking at free cash flow, I like growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, keep some of that cash on the balance sheet as cash or cash equivalents, buy back shares, which it looks like this company does, pay a dividend, which this company does, and raise that dividend over time. We want a company to be able to do all of that. So going back in time here, December 31st, 2021, $17 billion in free cash flow. Looks like that was down slightly in 2022 to 12.6, but we're going to talk about that when we look at the repurchase of shares. Looks like that was back up in 2023 to 12.9, 2024 down again to 12.5, trailing 12 months to 16.5. So it looks like maybe a little cyclicality here, up and down in 2023 and 2024, but maybe back on the upswing in 2025, but we'll have to wait. The trailing 12 months does include part of 2024 numbers. Looking at the repurchase of shares, $4.6 billion in 2021. 2022, that really jumped up to 13.3 billion. So even though it looks like the free cash flow decreased, a lot of that can be accounted for by the increase in repurchase of shares. Not the case so much in 2023, as the repurchase of shares went down slightly, even though their free cash flow went up. So it may be a downturn in 2023, which continued into 2024. Because again, the free cash flow did decrease to 12.5, but the repurchase of shares also decreased down to 9 billion. So it looks like from 2022 down in 2023, down again in 2024. We'll have to wait to see what 2025 numbers looks like. They haven't repurchased any shares as of yet. Now, jumping over to some of the metrics from stockanalysis.com that I look at more of a deep dive. Revenue, I want to see growing revenue, which you can see here up and to the right, currently at 124.188 billion there. So very nice growing revenue. Profit margin also is growing, minus the 2022 downturn there. Looks like they're nice and steady up and to the right. Trailing 12 months has them at 18.44%. EBITDA, earnings before interest, depreciation, and amortization. Earnings before interest, tax, depreciation, and amortization is what EBITDA stands for. And again, up and to the right is what we want to see, which is pretty much what you're seeing here. Maybe flattened off here in the last trailing 12 months, but up to 38.228 billion from around, what was that, 28 billion or 30 billion there back in 2020. So definitely seeing growth there. The total assets, we want to go over total liabilities. I would usually like to see a 2-to-1 ratio here or better. They're not quite there at total assets at 273.85 billion, but they do definitely have more assets than liabilities, 176.39 billion in liabilities compared to 273.85 billion in assets. So definitely seeing more assets than liabilities. Liabilities stays about the same, maybe fluctuates up and down a little bit from year to year. Same thing with assets, about the same. Total debt, though, we want to see them bringing down their total debt. They are, if you see that decrease there, currently at 101.53 billion in total debt, but it is coming down from where they were at in 2020. Cash and cash equivalents, like to see some cash on hand, 9.69 billion cash on hand in the trailing 12 months. Looks like they've increased that over the last several years. And total shares outstanding, we want to see that coming down as well. I want a company to be pulling shares out of the market so that I am more of a shareholder as they buy back those shares, even if I don't add to my position. And you can see that again. Nice decrease of shares over time, down to 3.81 billion in the trailing 12 months. So very good numbers all overall. Again, growing revenue, growing profit margins, earnings before interest, taxes, depreciation, and amortization growing as well. Assets remaining pretty steady, liabilities remaining pretty steady, but definitely more assets over liabilities. Debt coming down slightly, shares outstanding coming down, and cash on hand. So good numbers overall with Comcast. That is why we are looking to add to that one and continue to add to that one, which we have been doing the last several months. All right, next on our list, again, this is one that we were adding to back in August, kind of paused a little bit there in September, back at it again. The Procter & Gamble Company, ticker PG. This is out of the consumer staple sector here. Closed out the week at $152.50, which puts them slightly under my cost basis at $154. I should have put my positions here, but I did not add that in this time. But nonetheless, I do hold both Comcast and Procter & Gamble. This one is, again, slightly under my cost basis. Looks like they were, again, up slightly in the after hours there. 52-week range as low as $149.91, as high as $180.43. So another one that is very close to their 52-week low here. Not quite up against it like Comcast, but very close nonetheless. They do have a market cap of $356.92 billion, large cap company here. Price to earnings ratio at 23.43, which seems a little elevated, but it is always elevated for a company like this. Sorry about the noise in the background. That's my neighbor doing some work there. That's annoying hum there. That's skill saw, I believe. He's doing some cutting of some wood there. Forward PE a little lower at 21.81%. Dividend current is $4.23 or 2.77%. Ex-dividend date was way back in April, but it looks like their ex-dividend date was actually in July and paid out in August on the 15th. So don't know why this is not updated, but should be updated to that July with August payout. So if you were to buy them now, you're going to have to wait a couple months to get the next dividend. Beta of 0.36, so much less volatile than the overall market. Analysts also call this one a consensus buy. Price target of 176.57, which would represent a potential 15.78% upside from where it currently sits. Earning date is October 24th, so another one that is having their earnings later in the month here. Now, or in October. We're still in September, still have a couple days left, so not trying to rush out September quite yet, but it is very close to the end of September. So at October, the end of October, not the end of this month, September. Now, again, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 2.41%. We compare it to their current 2.77. Since it is higher, that again speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio is still well under the 75% or lower that I look for at 62.62%, but it is getting up there, so you want to keep an eye on that. Now, return on capital employed, again, another metric I like to look at, is above the 10% on this one at 24.23%. And EPS growth, earnings per share growth, is forecasted over the 5% that I like at 5.96, with revenue growth forecasted at 3.94. Now, we're going to look at free cash flow again. Companies can do some things with that. You know what they are. Going back here to June 2022, $13.5 billion in free cash flow. June 2023, $13.7, so it looks like an increase there. June 2024 up to 16.5, June 2025 up to 14, and then trailing 12 months is basically your last June report out. So now let's look at repurchase of shares here, because even though free cash flow looks like it went up slightly, I would say it actually decreased, because again, look at the repurchase of shares. Went down from 10 billion to 7.3. So it looks like from 2022 to 2023 there was actually a decrease. Now it looks like that went back up in 2024 to 16.5 billion. They decreased their share repurchase of shares a little bit more, but the difference there definitely looks like improved free cash flow. 2025 looks like another downturn, 14 billion, and then 6.5 billion up in repurchase of shares, but down in free cash flow. So it looks like maybe that's flat from 2024 to 2025, but it does not look like quite the increase we want to see. So a little bit of cyclicality in the free cash flow on this one, but they are pulling shares out of the market. Now let's look at some of those metrics again. Again, we want growing revenue, which you're seeing, right? Nice up and to the right here from 2021 to 2025. Nice, steady, even though it's not a ton, steady dividend or revenue growth. 84.28 billion. Profit margin, again, nice, steady. Well, looks like it actually might have had a few years down there, but overall, from where we were in 2021, maybe slightly up 18.61%, but profit margins even maintaining would be nice. This is up a little bit. EBITDA, earnings before interest, taxes, depreciation, and amortization, again up and to the right, 24.46 billion. Total assets has slightly increased up to 125.23 billion, which is much higher than this, and gives us that almost 2-to-1, not quite, but almost 2-to-1 ratio we're looking for. 125.23 billion in assets to 72.95 billion in total liabilities. Looks like liabilities are kind of remaining about the same, where assets have maybe slightly increased to about remaining at the same. Total debt, now this total debt has actually increased to 36.53 billion, so we'd like to see this decreasing, not increasing. Cash and cash equivalents, 9.56 billion in cash and cash equivalents, and diluted shares outstanding down to 2.45 billion. So they are pulling shares out of the market. So again, up and to the right, I'd say staying flat. EBITDA up and to the right. Total assets slightly up and to the right. Liabilities maintaining, looks like. Total debt has increased. That's the only one that really jumps out to me that's going in the wrong direction. We'd like to see this going down over time. Cash and cash equivalents, they're up a little bit from where they were in 2022, but down slightly from 2021. Not alarming by any stretch. Looks like about at 9 billion, 9.5 billion is where they like to keep their cash and cash equivalents. But shares outstanding is going down as well. So Procter & Gamble, Comcast Corporation, let me know what you think of those two. I'm going to be adding to those ones as the month of October rolls on, so long as they remain in my buy range there. But again, if other stocks present opportunities that are in my portfolio, I will probably add to those as well. All right, as we look to wrap this one up, here are some other companies I feel are, around that fair value, maybe undervalued right now, that you might want to take a look at as well. Pfizer is one I may be adding a little bit to as well in my portfolio. Owens Corning, if it got back down into the 130s. General Mills is one I keep coming back to over and over again. I have not added it to my portfolio, but this is one I would love to add sometime in the future if it got cheap enough, or if I wasn't focused on adding individual positions. Zoetis looks to be cheap. A lot of companies in the healthcare sector overall look to be cheap right now. Might be a sector to look at. Genuine Parts Company, American Water, a utility that I've held before that I wouldn't mind getting back into if it got back into the 120s. Chevron, Leidos, NextEra Energy, 170 or below. I like that one. It's kind of run up a little bit above that, like 75, 76 again, but if that one was a drop under 70, I'd look to add a little bit there. Chubb, another one I'd like to add if it got below my cost basis. Occidental, anytime this one drops below my cost basis, looking to add. Badge Meter, another one I wouldn't mind adding to the portfolio in the future if it got cheap enough. Valet, current position, if it dropped back into the $9 range, I'd probably add to. And Vici, I added a little bit to here last week and the week before. So if this one drops under $32, I wouldn't mind adding there. There's several others out there. If you guys have some suggestions for other stocks you feel are undervalued, drop in the comment section. Help everybody out down there. Let's get a list of those undervalued stocks so people can review them and see what they'd like to add to their portfolio as well. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the positions I'm looking to add to Comcast, and that should be 9/27 is whenever I'm putting this out. So September 27th, not August 31st, is when this should say up here. But again, let me know what you think and what you are adding to in your portfolio. Any suggestions for companies you feel are undervalued, go ahead and drop them down there as well. Again, share with anyone out there. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.